What is Neptune and what is it trying to accomplish?
Yeah, so initially we started out as sort of a pure play. So we started building master nodes in the DeFi space, which was pretty interesting. I'm not sure if are you familiar with Dash tokens?
Yep,
Yeah,
definitely.
so we basically raised $20 million in 2017 and bought a whole bunch of Dash. I think looking back, we bought maybe 19,000, but it was $2,600 or $2,000 for a Dash token. And so we bought these tokens basically at the top of the market. But we built these master nodes, and we were a Dash pure play at the time, hence Neptune Dash. Our ticker was Dash. It was really cool. People liked it, and that was sort of the proof of stake component of Dash tokens. And so we built these master nodes. The master nodes kicked out some revenue. We took the revenue, we reinvested more Dash, and hence, you had sort of this growing network of master nodes that we owned. But unfortunately, Dash wasn't the token, and it collapsed. And sort of, the model of our business was really appreciation of the underlying asset. And because we didn't get that, we entered the bear market for a couple of years. It was tough times, right? So we no longer became that pure play of Dash masternodes. We kept some Dash masternodes, and we do like them. And I think Dash has a future. But we really sort of leaned in towards diversification. We like the proof of stake elements of some other tokens like Cosmos Atom. And so we built up sort of a delegated to the validators, and we got that 10%, and we're like, wow, this is great, especially since we got in at probably $3 or $4 into Cosmos Atom, and now it's at 20, 22 or 25, 20, 30 Canadian, I think. So that's been a really successful venture for us. And then, last year we were like, we need some Bitcoin. I mean, we had a bit of Bitcoin, but we wanted to buy some Bitcoin, and that was sort of the start of the pandemic. So Bitcoin was really down at that point in time. So we added some Bitcoin, and then DeFi started kicking off, and then it was like, okay, well, we can earn on almost everything. So let's build this massive diversified portfolio where you get the appreciation in the underlying assets. We invest in DeFi high yield spaces where we can actually earn income. Try and get as much income as we can through proof of stake, DeFi, whatnot, and we'll build this high yields growth portfolio. And that's what we did. And we got a bunch of Bitcoin, probably at $6,000 to $9,000. Hindsight, we should have bought a lot more. And we were very careful not to blow up our cap structure, obviously, during the bear market. So a lot of companies raised at pennies, and they have hundreds of millions of shares out. So we were very cautious to not do that. We took very minimal money that we needed just to buy a little bit of crypto. We cut our costs down to nothing. Essentially, we didn't get paid, and accrued on the balance sheet, and just kept chugging along, and it's served us well coming out into this bull run. So now when people invest in our stock, now they're getting a whole whack of stuff. I mean, we're really a diversified play now. Not only are you getting appreciation in all our assets, our crypto assets, you're getting that yield, and now we're into proof of stake. Our background has been proof of stake, but now we're loaning. We're taking advantage of the DeFi space. We're doing some interesting derivative structures that's enabled us to buy mining rigs without actually raising capital. So that's pretty cool. Mm-hmm. And we protected our downside risk as well. We've done some really great hedge plays, some put and call options. So we'd be really able to capitalize in this space without blowing up our cap table. And so now we're driving forward. We're doing some really cool stuff that we can talk about here in a moment, on the mining front as well, on the actual proof of work, traditional, both conventional and some green carbon neutral mining.